I'm a data wonk, flat and short. I'm fortunate enough that I get to lead the research and insights, intel, and innovation business for SHRM. We call ourselves SHRM. And as an organization, we represent about 1.6 million HR professionals, just over about 2 million different employers that they represent. And then beyond that, they represent close to 235 million families, workers, and individuals that they impact. What I'm going to share with you today is research that we've done over the last 10 months to really look at why it is that the workforce is changing, but more importantly, why it is that we continue to run into challenges. So just out of curiosity, how many of you have run into challenges with dealing with your workforce or even trying to stockpile your workforce? Let's be honest. Anybody? I think we're all here. Everyone's been in this boat, right? I can share with you that what we're experiencing is a term that the military often refers to as VUCA. How many of you have heard the term VUCA? It stands for volatile, uncertain, complex, and ambiguous. We're dealing with a very VUCA situation. Of course, in 2020, this should come as no surprise, it turned into, and I've had the good fortune of meeting Secretary Austin, it turned into a situation that he calls a FUBAR situation. How many of you know what FUBAR stands up? Okay, I'm not going to explain it, but please find one of your colleagues that has their hand up. They will explain it to you. Let's just say it's not a great situation. What we are experiencing in reality is a churn that is consistent. And in the workforce, we have seen two key factors. First and foremost, expectations have changed. Workers, for the first time in almost 100 years, have what they call in Seinfeld, hand, right? They have the upper hand. They have the hand in terms of being the group that has more expectations and more to give their employers than the employers have to give back to them. The other thing that we're seeing, though, is the pace of change and the pace of innovation that exists. What we used to see is, for the last 20 years, pace of change was set basically on what was innovation in relation to the technology sector, right? Still very fast, but nowhere near as fast as what we're seeing today. And it really resulted in a variety of challenges that have made it incredibly difficult, not just for us as employers to create and generate the kind of things that we want, the productivity, the output, but in reality, they've created challenges that make it difficult for us to create new value. And we'll talk a little bit about that here today. Now, I'm going to get into the challenges that lie ahead, but I'll be brutally honest. My wife, Christine, says, stop depressing people this early in the morning, okay? She says it over and over again, and I'm going to tell you now, it will depress you, but I'm going to bring you back because I'm going to share what many employers are doing, okay? So I'm going to hope that I can bring you back. We do this study called the State of the Workplace, and specifically what we try to do is capture what it is that people are experiencing as challenges from 6 perspectives. First and foremost, from the HR executive and the CEO and CXO perspective, as well as what HR professionals say is going on. And then beyond that, we also look at what working Americans say. And we survey about 50,000 working Americans every week, trying to understand what it is that they experience. I will also share that I will make my slides available. So please feel free, you don't have to take those really distorted war pictures. I promise I will make them available. And if you need to find me, my email is knowledge@shrm.org. Really easy email to find. And I'm the guy that answers that. So more often than not, when you look at employers and what it is that they say are the biggest challenges, they say specifically a couple things. One is that they see inflation issues becoming a true challenge. They also see specifically inflation issues as far as it relates to wage inflation. Beyond that, they also see talent shortages and labor shortages as a real issue. Now, I'm going to ask you a question. How many of you have encountered a labor shortage or a hard time finding someone to fill a role? What was the longest that it took to find a role? Because everybody raised their hand. 6 months, right? About 6 months. That's what I keep hearing everywhere I go. And what's interesting is, what used to be the national average was about 46 days. 46 days to fill roles. This is all roles. Today, it is closer to 125 days. 125 days. Now think about that. That's 3 times the average what used to be just 5 years ago. That's fairly scary. That means I'm not going to be able to process anywhere near what I used to. And so when you see things in the news around generative AI, and you see things in the news around automation, are you surprised that we keep hearing about it? No, because in reality, we need to innovate to get us to the point where we can do what they call comprehensive work, meaning filling the task, delivering, while also trying to fill roles. So these are challenges that every employer is seeing. In addition to these challenges, we also see that many are forced to fight with issues of mental health, wellness, things that have to do with making people feel good in the workplace, things like DE&I, sense of belonging, and all those things that used to be sort of back burner, right? They used to be the things that we did them just to feel good, and in reality now they are a part of the state of work. In addition to this though, we get a little bit deeper and actually work with CHROs, what we call CHROs, Chief Human Resource Officers. And what we focus on specifically is, what are your highest priorities when thinking about 2023 and what you're expecting to see in the workplace? And in reality, all of them jump first to filling the gaps, the cracks in everything that is their culture, their organizational culture. And the reason for that is they believe that the key to making sure that they attract and retain the right talent is kind of putting the spackle where it is that their culture is cracking, where it's falling apart, right? And the solutions that they're bringing to bear are those that they believe will create higher morale, higher engagement, higher belonging, and make people want to come work for them, even if it's just for a gig, right? This is where we're seeing that the state of the workforce changing significantly. What's interesting though is, this is what CHROs say, but when you ask working Americans what it is that would take to make a difference, more often than not, they do not align. You can see that they are misaligned in particular. And why is that? Well, if you ask a worker what it is that they want, they want fair wage and employment. If you were to ask people who are considering leaving, which is now close to 61% of working Americans saying that they are considering leaving their current role within the next 6 months, what you see is the first thing that stands out is fair compensation. They want to be compensated fairly. The second thing that stands out is they want flexibility and career advancement. And these things are not the things that CHROs see as the top things. In many cases, they do align, but they're not aligned in terms of priority. And so there's a misalignment between what it is that working Americans want and what it is that HR professionals, and more importantly, the employer perspective, are prioritizing. Now, I'll ask you a question in particular. I heard the reference, and Larry made a reference specifically to millennials. How many of you have ever had a drink because of a millennial? Okay. I've had a drink because of Generation Z too. I have 3 daughters. And I'll ask you a question. What was it that caused you to kind of think about drinking, right? Was it something that they had what you believed was unreasonable expectations, or they did something that didn't align with what your view of the workplace should be, or they did something that was outside the norm of what you can normally do? They asked for some sort of creativity. How many of you experienced that? Let's be honest. Most of us, right? And what's interesting is we just heard they're the majority now. So who was out of line? They were. I knew that was going to happen in this room, and my mom warned me. My mom was a longtime NAIFA member. And so in reality, the fact of the matter is we were sort of out of line. And I'm a Gen Xer, but I'll be honest with you, we were sort of out of line. It was us. Now, how many of you in this room are millennials? It's okay, raise your hands. Don't worry, nobody's going to identify you. Do you feel like you've been bagged on a ton? You're smiling like the cat's got your tongue, so I'm going to say yes, you do. The truth of the matter is we sort of bagged on this generation, but it was because they were bringing about the expectations that the rest of the future workforce was looking for, right? So the next time you want to say something about a millennial, wipe that thought out of your mouth, or out of your brain, right? Wipe it off your brain. Because in reality, what they were doing is just making clear that the expectations were going to change. Do you all know who was the last generation that did that? Baby boomers, right? We don't bag on them. Nobody bagged on them, except for maybe the greatest generation. But the point is, wipe those thoughts out of your mouth, because the biggest issue that we have when it comes to the workplace and marrying it up with the workforce is expectations that are unmet and lack of willingness to engage in creativity. That is what happens. And I told you I was going to depress you. Here's proof. How many of you have heard about the Great Resignation, right? It was everything we talked about. Everything we talked about. In 2020, the Bureau of Labor Statistics put this report out. And if 2021 in actuality. If you look at it, everybody looks at this chart and what do you see? The first thing you see, the big red spike, right? Because that's what? 45 million jobs lost in 1 year. And what led to that? That was COVID. We shut everything down. What do most statisticians see when they look at this? It's the blue. It's the blue. And I'll explain. That is baby boomers retiring. 10,000 at a week. 10,000 per week for the last 13 years. Think about that. That's 10,000 people leaving the workforce per week. The reason that we continue to fight and talk about the Great Resignation and unmet expectations is because we've lost the biggest generation we ever had in the workforce. And that's the baby boomers over the last 10 years, last 13. So we're going to continue to run into labor shortages, right? Whether we want it or not, we're going to run into labor shortages. And we're burning the candle at both ends. We're losing what was the biggest generation, and we're going to lose them no matter what we do. And then we're also making it hard for the next biggest generation to want to work for us. Right? I told you I was going to depress you. Now you're all looking at me like I did something wrong. So what are we trying to do as employers? Well, the immediate reaction whenever I show this data has been inflation has gone up, right? We saw that economically our Fed has tracked inflation, and we saw and expected that it would be somewhere around 10%, right? We expected it would be somewhere around 10%, and what did the Fed do? What does Jerome Powell do? They keep wanting to compel unemployment to go up, inflation to go down, and so they continue to raise the interest rates, right? And they're doing it a quarter at a time, hoping that they can have a prolonged recession, not as deep in any one spot, as opposed to a full-blown recession. Now, so far, it has worked. It has worked, unexpectedly so. But unfortunately, the one thing the Fed doesn't control is the price of labor. They don't control the price of labor. And we, employers, are the ones that do that. In order to do that, what have we done to find talent? We've paid more. In reality, in 2021 and in 2022, we started to pay close to 6 to 11% more than we used to. In 2023, we've doubled down and said we're going to pay 13 to 16% more than what we used to. So labor costs have gone up close to 13 to 16%. The sad thing is, we as employers will not correct that because we are continuing to fight the labor war, the talent war, the war for talent. What is the only thing that will push us to do that? Is a full-blown recession, right? A full-blown recession, because immediately now we start to feel the pinch in terms of revenue, and it forces us to adjust, right? It forces us to engage in a market correction, which is what the Fed is hoping we will do. But we haven't done it to this point. We're still at around 13% in terms of an average wage inflation. In addition to all this, we see that HR professionals are reporting some key issues. Number one, off the bat, and it has not changed in any way, it's only gotten worse, is that we continue to see a lack of qualified talent, lack of qualified applicants. How many of you, when you interview someone, ask yourselves, how the hell did this get to me? How did this person get to me? Right? I do that every day. And I'm hiring people with PhDs. And I'm saying to myself, what the, you know the rest of that. The whole point is we continue to see that, right? And it's because at one point, we had almost 2 jobs for every person, right? We had almost 2 jobs for every person. And because we've continued to build that wage inflation, people are choosy. People are choosy even though they might not have a job. Undergirding all that is that we spent a boatload of money on keeping them unemployed. We spent, as a government, and many governments, a boatload of keeping these people unemployed when they were unemployed, but then after they had the ability to go back to work. So keep in mind that these are the things that we continue to see. I'll also share that we track what it is that people say are the greatest challenges when it is that they are trying to find talent. They say it's lack of uncompetitive pay. In addition, they also argue that many people are asking for more workplace flexibility, right? How many of you have had to fight the remote versus not remote war? Right? How many of you have won? Still, right? It's still out there. These are the kinds of things that pop up over and over again. And we see it over and over again from managers. Managers telling us that these are the things that matter. But what it's led to is a whole host of problems. A whole host of problems. Because what I'm talking about is how do we find talent? In reality, though, it's led to one major disconnect. And it is specifically that finding people has led us to a disconnect around what it is that they expect from the workplace, and more importantly, has hurt one group in particular. It's hurt people who we focus on through our diverse programs. It's hurt people that we look at when it comes to diversity, equity, and inclusion. And it's hurt the entire body of our workforces. And so I'll share with you in particular, when we look at each of these financial indicators and each of these trends, what we're seeing more than anything else is a drop in inclusion in organizations. We're seeing a lack of focus and belonging. And even though many organizations are putting forth a good effort, they're seeing results diminish. And I'll share with you some data here. 43% of workers say that in some way, shape, or form, they have experienced an exclusive practice, a discriminatory practice in the workplace. That's data from 100,000 working Americans across 10,000 employers. In addition, we're also seeing that 58% of organizational leaders believe that they could be doing better or more. Believe that they could be doing better or more to create inclusive workplaces. And if you were to go on the street and ask working Americans every week, what is it that they think corporate diversity efforts have done for them? 7 out of every 10 will tell you it's marginal at best. Marginal at best. Think about that. We go through all these efforts, and diversity is the thing that suffers more than anything else. And most of the people that we're trying to benefit are not experiencing it. How does that happen? If you were to talk to CEOs, this is the scariest piece. Nearly 4 out of every 5 will admit behind closed doors that they have not even come close to getting it right, getting inclusion right, getting equity right, getting diversity in their workplaces right. Nearly half of all CHROs do that. And the only reason that there's a difference between these two groups is because CHROs are the ones that actually typically, in many cases, lead diversity efforts or support chief diversity officers in organizations. So we've put all this effort. You're here for this symposium. Are we getting it right? The data suggests no, but I want to know, do you think you're getting it right? How many of you feel like you've done enough in your organizations to get it right? I didn't lie. My wife was going to depress you. I see a lot of not looking at me and a lot of staring the other way. I've got one theory on it. And I'm not going to talk about employee resource groups. I'm not going to talk about diversity and inclusion programs, apprenticeship programs, career pathway programs. I'm not going to talk about anything like that. I'm going to talk specifically about one thing, and it's culture. When you look specifically at what it is that organizations strive to do and what they care about, it is always based on culture. How many of you have heard the whole phrase, organizations measure what matters to them, right? I saw one hand go up. Most organizations care about the things that they measure. That's it. And when you think specifically about what they care about and what matters, they set that up in their culture. It's called their values. It's called their guiding principles. It's called their scorecards, right? All those things matter. And in many cases, we haven't done a great job of doing that as employers, as an employment community. So when you talk about the workforce, I want to talk a little bit about culture. And I'm going to share some examples where people are trying to succeed. I mentioned the war for remote work, right? I mentioned specifically the war for remote work. And many organizations have argued that culture is the problem. When you think about that, how do I sustain my culture? How do I do this? We all know the stories about Goldman Sachs, and they want to come back, they don't want to come back, they want to do this. I work for an organization, we came back. We are very much an in-office culture, we always have been. But what I'll tell you is, when you look at the data across most working Americans, people who are remote report higher satisfaction. They report higher satisfaction. Now, in addition to that, though, they also report higher turnover intentions. And they report higher productivity, but when you look at their output, it takes them longer to produce, okay? All that to say is that we threw this out as a diversity issue. We threw it out as a culture issue, and in reality, it's still very much unknown. My advice to any employer when thinking about the state of the workplace is to think specifically very long and hard when making about this kind of decision, because it's not as simple as we just want to make everybody happy. In addition, we also see that specific organizations are tackling one key issue. How many of you feel like the people managers in your organizations are strong? Be honest. Nobody's raising their hand, and I know that you're all paying attention. Most people managers are weak, right? There's this old saying from Jim Clifton, it's the manager, stupid, right? And in reality, what he was trying to say is the manager is the problem in everything that we do, from culture to the offshoots of culture, like inclusion and diversity and equity. What we found is, from our data, this is particularly true when you think specifically about workplaces that make people come to those workplaces and enjoy those workplaces. If you were to look at the way people talk about their workplaces, when they say that their culture is good, only about a third of them say that they are interested or thinking about quitting in some way. When they say that their culture is just average, it's closer to 72%. When they say that their culture is bad, they say that they're thinking about quitting at a clip of about 90%. Can you imagine going to your workplace and imagining that 9 out of every 10 people is thinking about quitting? 9 out of every 10 people. If you're not the one thinking about quitting, that means you're the one out of every 10, right? You're the one. What's that old line from Rounders? If you can't spot the sucker at the table, you are the sucker, right? Why do people jump in on poor culture, though? Why do they say that? It's because they view lack of belonging. They view lack of principle. They view lack of true guiding thoughts. But who is the steward of all that? Who is the steward of all that? It's your people managers. It's not HR, it's not the leaders, it's the people managers who live that every day. And what's funny is people are becoming much more savvy consumers of workplace culture. They know what they want. They know 1,000% what they want. They want to work somewhere that's professional, that gives them opportunity, that has a manager who's going to make clear expectations for their behavior, and who's going to deal with problems. Deal with the problems in the workplace. They don't want to work with unprofessional people. They don't want to work with people who are, not professional and are basically not accounted for in any way, shape, or form, have no accountability. In addition, when it comes to inclusion, they're very clear about what they want. Very clear. This is one where it stands out really easily. I've never seen data like this where people could articulate really what they want. I don't know about you guys, I do market research also, and sometimes getting somebody to say what they want or what they would like is the most difficult thing imaginable. And I remember in financial sector, financial industry, I used to work for Allstate. It was incredibly difficult what you wanted to get people to do other than say, I just want to make more money, right? I just want more money. Or products that yield that, right? And in reality, one of the things that stands out is when it comes to inclusion, people are very clear. They want a manager who is open to listening and can engage in a dialogue. They want a manager who provides equitable representation for them and their interests. They want somebody who can follow through on any DE&I promises. They want someone who is going to provide the kind of appreciation and recognition for the things that they care about. And most of all, they want somebody who has gone through allyship training and who has gone through sponsorship training, career training. Very easy. These are all things we can enact. And in reality, most employers say that they have these, but refuse to scale them. Refuse to scale them and refuse to do it with their managers. So when you think about what makes a culture great and what makes it so that you have fewer than 1 in 3 people thinking about quitting, these are the things that stand out. It's very easy to do. Now, I'm going to share 2 final thoughts here. The number one question I get over and over again when I'm in a room that has Chatham House rules, right? Everybody knows what Chatham House rules are, meaning nobody leaves the room, nobody shares what's in there. Number one thing I get when I'm in a Chatham House rules room with CEOs is, does diversity really matter? Show me, quantify that it matters. And I typically do it in 2 ways. I do it from a perspective of human capital metrics, but I also do it from a perspective of EBITDA. Because when you're talking about large corporations, EBITDA is what stands out, right? And I'll share with you, when it comes to the 8 human capital metrics, it does 1,000% matter. 2 out of every 3 prospective candidates look and go to organizations that are rated highly when it comes to equity and inclusion. They just do. They look for other diverse workers. They look for proof that there is diversity in the ranks. 57% of US employees think their companies could be more diverse, could be much more diverse. And 54% of CEOs indicate needing to make reforms in some way, shape, or form, making their workplaces better. Making their workplaces better and more inclusive. So it's real, it happens. But I'm gonna leave you with 2 thoughts on people managers. First and foremost, I mentioned the 91% who think that it's 91% of the individuals who think that their culture is good, meaning that they say that their culture is good. When you think specifically about what it is that matters when you're thinking about good people managers and how they treat their cultures better, you see that this drops to 59% when it becomes an issue of the culture being described as average, meaning people managers feel like their managers are good managers only 59% of the time. In addition, you see that when people rate their cultures as poor, only 24% say that their people managers are doing their job to create an inclusive workplace. That's scary, meaning that drop is correlated 1,000% with what you expect to see in terms of the way people describe their cultures. But here's the financial argument. We have created an index, and I'll share with you, it's called empathy. I don't know about you, but I hate the word empathy. It's been 2 years of it, it's overused, it's become meaningless in many cases. But what I know about it is, it's very popular when it comes to describing an inclusive and a culture that creates belonging. What I'll share with you is, when you look specifically, and we capture data from 10,000 major brands, just brands, big employers, and we had at least 100 employees from those organizations. At least. For one organization that we all get deliveries from, we had close to 4,000 employees. What we asked them to do was fill out a quick 5-item survey. Here are the items. We asked them to really describe their organizations. If you look at these items, they're really all about belonging, inclusion, and making sure that we're creating equitable workplaces. What we found is, after tracking their data for 5 years and collecting over 100,000 data points each year, what we found specifically was those organizations who have invested and have higher cultures of equity and cultures of true empathy have 2 times the EBITDA growth that those other organizations don't. And they have 1.5 times more EBITDA margin. So the next time you ever have to make a business case around equity, diversity, and inclusion, I'd ask you to consider one thing. There is data out there that suggests specifically on the general that it has a huge impact, a huge impact. And more importantly, what I'd ask you to think about is, why is it that that person is asking me for that when this debate is over? This debate is over. There's no reason to argue for equity and inclusion or against it anymore. So the next time you think about that, think about your labor war, your talent shortages, and the culture that you're building, and remember that all of that has a huge impact on what you do in the world of inclusion. Thank you all so much. It was great to be here with you today.